Let's continue with application and interpretation of tax treaty. In this session, we are going to discuss the general rule of interpretation which are commonly accepted by the globe. While reading these particular rules, you will understand majority of these rules are common with the domestic tax law, because definitely you cannot have a new rules of interpretation for global law and domestic law. Obviously, the some common thread you can find in both the law. So basic principles of interpretation of treaty derived by the customary interpretational law. Yeah. So all these based on the custom that we follow. Traditionally, it is evolved over the period of time. The first rule is known as golden rule. It is also known as the litera legis. It is also known as the literal interpretation, that you know. Objective interpretation, ideally any term or word should be interpreted keeping its objective and ordinary or literal meaning in the mind, and the term has to be interpreted contextually. However, if the grammatical interpretation would result in absurdity or inconsistency, it should not be adopted. Unless and until plain reading is giving you absurd output, you should not deviate from golden rule of interpretation, that is litera legis. So subjective interpretation. Subjective interpretation means interpretation of two parties while signing the contract. What was the objective that they had in their mind? The terms of the treaty are to be interpreted according to the common intention of the contracting parties at the time of treaty was concluded. So we need to check their intention, and according to that treaty will be interpreted in case of ambiguity. Purposive interpretation, you know that we have to, this is kind of mischief rule. Whatever mischief was sought after, it has to be reduced, and the treaty should provide remedy for the objective for which it was signed. The treaty is to be interpreted as to facilitate the attainment of the aim and objective of the treaty. Principle of effectiveness. This is also very important. It is like, you should interpret your treaty in such a manner that every provision or all the articles should have effectiveness. One interpretation of one article should not, kill the another article. That should not happen. Treaty should be interpreted in manner to have the effect rather than to make it void. So obviously you have to interpret in such a way that it should become effective. We should not make it void. Principle of contemporo exposito. A treaty terms are normally to be interpreted on the basis of their meaning at the time of the treaty was concluded. However, this is not a universal principle. What they are saying, when the terms are evolving, the terminology or the words or definitions of particular phrase is evolving. It is changing, and because it is changing, if the treaty was signed in 2002 and right now we are interpreting in 2021, when the meaning of the word had changed, so we have to refer the original meaning, or the meaning of the word or the phrase which was existence at a time of signing the treaty, not at the time of application. But definitely this is not a universal rule. Many people are following the current interpretation, not the backdated interpretation. Liberal construction, that means reasonable construction. Reasonable, like you have to give the reasonable interpretation. Do not read and as a and. You can read and as or. You understand? So you have to change the meaning of the word. Sometimes mandatory force should become voluntary force. Shall should be interpreted as a may. So you can change the meaning of the word entirely. Okay, when you have to give the reasonable interpretation or liberal interpretation. It is the general principle of construction, that is interpretation, with a respect of treaties, that they shall be liberally construed so as to carry out the apparent intention of the parties. If you have to give the relief from a double taxation, then you have to read treaty in such a way that the assessee should get the benefit, that is the beneficial construction. Extrinsic aid to the interpretation of the tax treaty, it is very important. In one of the past exams, the question was targeted from this. Extrinsic means external use or external aids that you take while interpreting your treaty. So apart from the agreement that you people have signed, what else the supporting document that you can follow to interpret the treaty? A wide range of extrinsic material is permitted to be used for interpretation of tax treaties globally. That is interpretive protocols. Protocols mean the system that we have established, and protocols are forming part of the treaty. So toward the end of the treaty, they will put the protocols. You understand? According to the protocols, you can interpret the whole treaty. resolutions, committee report, setting out agreed interpretation, subsequent agreement between the parties regarding the interpretation of the treaty or the application of the provisions, subsequent conduct of the state as the evidence intention of the parties and their conception of the treaties after implementing the treaty, how they have doing the business or how is it actually implemented. So by looking at that, obviously you can interpret the treaty. Parallel treaty means one country has signed treaty with another country or another time, so you have to check the parallel treaty, a comparison treaty. A parallel treaty in a pari materia in relating to the same subject matter in the case of doubt. Extrinsic aid, international articles, essays, reports, cahiers published by the International Fiscal Associations, Netherlands. So some document which is published by authors and PhD researchers, that also you can do. Preamble of the treaty, mutual agreement procedure. Whenever we are left out with all the possible options, then we follow the map. Okay, mutual agreement procedure. We will sit together and we will try to interpret the paragraph to give the effect to the whole treaty. Common treaties on OECD or United Nations models and their importance, because majority treaties are derived from the OECD and UN model. So what were the discussion which has happened in their meetings in convention? So that also you can refer, like we in India we refer parliamentary discussion to interpret Indian income tax law. Foreign courts decisions, so court decisions also can be used. So protocol was the important theory. Protocol itself is the important theory. It might be targeted for 1 or 2 marks. So therefore I am covering protocol in detail. Protocol is the supplement to the treaty. In many treaties, in order to put certain matters beyond the doubt, there is a protocol annexed at the end of the treaty, very important, which clarifies the borderline issue. So whenever they feel that there will be possible issue from this treaty, they will put a protocol to interpret it. A protocol is an integral part of the tax treaty and has the same binding force as the main clauses therein. Protocol to India-France treaty contains the most favorable clause. So one of the example they are giving how the protocol will apply. So what is MFN? Most favorable nation means most favorable nation should get maximum benefit as compared to other countries. The most favorable nation should not be taxed at a higher rate as compared to any other country. Obviously, the best you should offer to the most favorable nation. Thus, one must refer to the protocol before arriving at any final conclusion in respect of any tax treaty. Under most favorable nation clause, a country agrees to extend the benefit to the resident of the other country, which it had promised to the resident of the third country. If there is a beneficial provision that this India has signed with any country, all those benefits which we have signed with some random countries, which will also be applicable, beneficial provision will also be applicable to those nations with whom we are having the most favored nation relationship. It tries to avoid the discrimination between residents of a different country. Look at the example. Suppose as per India-UK treaty, so India-UK, this is India and this is UK. A resident of UK is liable to pay tax on royalty in India derived at the rate of 10%. So in India-UK treaty, the rate is 10%. After some time, India enter into DTAA with Sri Lanka. As per the India-Sri Lanka DTAA, the resident of Sri Lanka is liable to pay tax in India on the royalty derived from India at the rate of 5%. So India-Sri Lanka treaty says it should be taxed at the rate of 5%. Obviously, you have to give the benefit to most favored nation as compared to the third party. You are giving to the third party at the rate of 5% and you are giving to the most favored nation at the 10%. What's the point of having a relationship of most favored nation with you? Therefore, we say, despite of mentioning 10% rate in India-UK treaty, the resident of UK can take the benefit of 5% rate, which is applicable to Sri Lanka. Please understand. Now, in this example, suppose India-UK treaty contains most favored nation clause, then the resident of UK liable to pay tax in India at the rate of only 5%, not 10%. Now, ambulatory and statistic approach. This is also very important understanding of the law that you need to have. Whenever there is a confusion in an international taxation, they always refer to the domestic tax law. Now, when we refer back to domestic tax law, there are two time periods. Okay, one time event at the time of the, or in the year, what was the law in the year of signing of the treaty, and what is the law in the year of application of the treaty. So which domestic law you should refer? This is the one of the international fight that we have to address. So whenever global dispute happens, or to understand the global treaty, they will follow the domestic law in the year of signature, in the year of signing the treaty, or in the year of application. See, a signature might have happened in 2002, 2003, but application is happening in 21, 22. So which year law you should follow? Because Indian law has evolved over the period of time. You know that Indian laws are constantly changing. So ambulatory approach says we should follow the current law, and static approach says we should follow the original law. If you see the meaning, okay, meaning of this particular word, dictionary meaning, ambulatory means changing, moving. That means with a domestic tax law, international tax law will also change, and static means static, non-movable, immovable, and therefore you should follow the original law. Okay, look at this. To decide what meaning is to be assigned to the said term, two views can be taken, and these views we are deriving from domestic laws. Okay, static, it looks at a meaning at a time when the treaty was signed. Okay, and the next one, ambulatory provision, it provides that one should look at the meaning of the term at the time of application of the treaty. So static approach focus on date of signature, and this is focus on date of application. All model common treaties favor this approach. This means ambulatory approach, because that is most relevant approach. However, with one caution, that this approach cannot be applied when there is a radical amendment in the domestic tax laws. If domestic tax law has gone through a tremendous amount of amendment, like in India we have, from old indirect tax system, we have scrap all the old indirect tax laws, and we have brought GST law. That is something called radical changes. In future, India is going to bring direct tax code. So whenever income tax is deleted and when they brought direct tax code, that will again consider as the radical changes. So that time they will think about whether we have to follow the static approach or ambulatory approach. But usually they follow the date of application, not date of signature. Okay. Thank you.